Welcome to Home Buying Seminar. Before we started recording, we were talking about the common mistakes we experience that people make when they're buying homes, particularly regarding credit, how it affects them and costs them a lot more money. Talk about that. I'm Bill Gross. I have Bill Gross Probate, along with my good friend and colleague,
Patricia Castillo.
and our good friend and mortgage originator.
Shannon Lender, how's it going, guys?
So, what are the most common mistakes you see people make, or that you coach people out of making, that can cost them thousands of dollars or cost them the house when they're shopping for a home?
I would say one, obviously high utilization. You always want to be under 10% of credit utilization if you can. And pay off your credit cards the day before your statement date. So I know a lot of my credit cards, the statement date is on the 24th. So I need to pay it on the 23rd in order for it to reflect on the credit bureaus. So that's I would say the number one thing is credit utilization. The number two thing is late payments. Now, I actually pulled up a study and it says that 1 in 5 reports contain errors in the study. So 1 in 5 reports have late payments that are actually not yours. They're incorrect. So if you go on annualcreditreport.com, annualcreditreport.com, and when you do that, it can pull up your full credit report and it will not give you an inquiry. That's the best thing, is you will not have an inquiry on these credit reports when you pull it from that report website. And you can see, are you actually late on these payments? If you're not late on these payments, you can actually dispute that payment, say, look, I did pay this, and that late will remove off your credit report. Now, you know that a late payment can affect you as high as 100%, 100 points on your credit score. So if you have late payments, make sure that they're correct. If they're not correct, you can actually dispute those. And the last one here, I have my notes here, is become an authorized user of a responsible person. A lot of people don't have enough credit. That's another thing I'm seeing, is people think that, oh, I don't have any credit, that means I don't need, I have good credit. That's not the case. If you don't have credit, you can still have bad credit. So get authorized user on someone who's responsible, who can actually, have a long credit history on their credit report. So those are 3 things that I would say to look out for. Is one, people that think that having no credit is good credit. That's not the case. Number 2 is making sure that any late payments on your credit report are real. 1 in 5 reports have fraudulent late payments reported. And the last one is utilization. Obviously, keep utilization under 10%. I think if you stick to those 3 things, you will be great. And one thing Patricia mentioned in another call was, if you have late payments on your mortgage, you are dead in the water. So once you have a house, you want to refinance, you need to be on time with those payments, because if not, we cannot refinance you. I don't care how, what your situation is.
Right. And so those are really good tips. And I just wanted to also comment, if life gets really busy, sometimes you may forget to make your payment on time or by the right before the billing cycle. So what you can do is also set up your automated drafts so that your payments get deducted from your account automatically, so you're not forgetting to pay them. And I've met people that pay everything in cash. They don't have any credit cards. And so they don't have any type of credit history, right? So you do need credit history as well, because that's what's going to help you buy a home and get a loan, is having stable and good credit history. So the way to establish that is,
And I see that with people with bankruptcies too.
right. And so you still need to establish your credit history again. Even if you had bad credit in the past, or you had bankruptcy, let's say 7-10 years ago, you would still need to establish your credit history. So a good way to do that is, as Shannon said, becoming an authorized user on a credit card. Maybe getting one of those prepaid cards where you put $500 into it and you're charging it. It's like a Visa prepaid. And so there's different things that you can do to increase your FICO. One of the things that people really don't talk about is credit, because it's just kind of like a boring subject. But at the same time, it's so important for all of us to have really good credit. So even if you are a homeowner right now and you want to refinance, like there's people that, are bought a home last year. Maybe they want to get a better interest rate, but you would still need to have, your a really good, strong credit score in order to be able to have that opportunity to refinance.
And when
So
you're buying a house, at least 3 lines of trade lines. Sorry to cut you off, Patricia, but you can't just have one credit card. It's not enough. You need at least 3 trade lines.
mhm.
So 3 kind of credit cards that you have, even authorized users, to really secure yourself for a mortgage.
Yeah, the other thing that could bring down your credit score is having too much credit. And what I mean by that is you're overextending your credit. So you have too many accounts that are open within a short time frame. So that will appear to a lender like you're financially stressed, and it looks like you could be a risky borrower. And so the lenders don't want to be in that position. They don't want to lend money to a borrower that has overextended their credit, has too many accounts open, and is just looking to get a home loan. Then it looks like you're a high risk buyer.
Yeah,
So,
The thing
100%.
that's interesting about all of this is all this can be done conveniently, comfortably, confidentially before you get into escrow or before you start writing offers. And I think this is the biggest mistake is, and customers don't, I think, understand that the best strategy is to get these things fleshed out ahead of time. And then you know what you qualify for. You know what your rate's going to be, or at least based on where it would be today. You know what kind of program you can qualify for, what kind of down payment you need, what credits you need from the seller, if any. And that's why it's so important that I think there's so much misconception. I do a blog on, I think, how bad the real estate and financial news is. It's not news, it's just entertainment. It's not going to teach you. And that's why you have the chance always talk to your real estate agent like Patricia or your mortgage originator like Shannon and get together step one in your process. How much can I afford? I don't know. What's your credit? And this gets started with that. And too many times, I think customers are scared to get committed to somebody. But if you don't commit to anybody, then you're committed to nothing and you're not going to get anywhere.
right.
And
So,
go ahead, Patricia.
oh, I was just going to explain about FICO and the actual formula. So, when a lender is looking at your FICO score, your FICO is made up of 35% payment history. So the lender is looking at your payments. Were they on time? Did you have any late payments? And how long ago did those late payments occur? 30% is the amounts that are owed. So your current balances, not just your monthly payments, but the actual balances are owed across all of your credit cards and car loans and student loans. 15% is the length of credit history. So how long have you had your credit? When did you start getting credit? And how have you been managing it? 10% is new credit. So you may have established your credit already, but now you have a new Home Depot card or you have a new Lowe's credit account. So any type of new credit makes up 10% of your FICO. And the last 10% of your FICO is the credit mix. So it's the lender's looking at what kind of credit do you have and on top of the balances that you owe. So that's just how the lenders look at your FICO and what percentages apply to each category.
And I can tell you, the banks will accept a lower credit score than you think. People think I need to have a 700 or a 680. That's just not true. Again, I've even seen DU approvals for 550 now. So I'm not encouraging bad credit. All I'm saying is a lot of people don't even look at their credit. They don't even look at it, and they think, oh, I'm not approved. You'd be surprised what the banks will take, depending on the situation, and just take a look at your credit. Take a look at it, and just because you're not at a 700 does not mean you do not qualify. So for sure, talk to a professional and I'm not encouraging bad credit again, but I'm saying that some people put themselves out of the running before they even enter the race. So look at your credit first. There's free resources out there to check your credit and see. Even just because it's not 700 does not mean you can't qualify. You can get in the house once you fix your credit. It's funny, a mortgage will help your credit score a lot. Having a mortgage on your credit does help. So especially if you're on time with that mortgage. So get that house and then get your credit up and you can refinance and get a better rate. right? So it doesn't mean, again, you can't get a house just because your FICO score is in the mid sixes. Or again, I just did a DU 2 weeks ago, 550, they still got it approved. So again.
And I think that's the lowest that you could probably be.
Yeah, yeah. I mean, they were right at the cusp. Right at the cusp. So FHA will accept it. Again, you're going to get hit on the rate, but you can still buy for
so
sure.
What was the rate that this buyer was able to get at 550 FICO?
It was a 6.5 FHA. So
okay,
it was a 6.5 FHA.
Okay, that's not too bad for 550.
Yes, I mean, they didn't even think they could qualify, so they were happy with anything.
Right, and the goal is get the home, get the mortgage, continue to make your payments on time, and then you'll be able to refinance.
Yeah, or here's the thing, we're repaying the credit now. So as they're shopping, it could take a few weeks or a month to shop. Let's try to fix it, and by the time we submit, who knows, your FICO score might be higher, but that's why you talk to a professional ahead of time. Because, hey, I checked this FICO score, it's low, right? Let's jump on it now, and I can still get you approved. You can still shop for houses. So if there's a house and you say, look, we cannot wait, let's do it. But while you're waiting, why not let's just fix it now? You know, there's a few things that we could do right now to get it done. You could do rapid rescores. Hey, pay off your debt, get a letter from the credit bureau stating that this is the new balance, and we submit it directly to the credit bureaus, and you can get a rapid rescore in a week, 2 weeks. So
time to lock in a better interest rate.
Exactly. That's what I'm saying. Just because you think you have a bad credit score does not mean you can't buy a house, especially if you talk to the right team. Because anything, I'm telling you right now, anything's fixable. You know, except for a bankruptcy, right? We got to wait. But anything outside of a bankruptcy is there's a solution for it.
Mm-hmm. Yeah, it's so important to have good credit.
It's a key component in the whole thing, and especially if you're tight. But I think more than having good credit is knowing exactly where your credit is. A, and then B, there's some low-hanging fruit. Let's clean that up, and you also can clean it up during the home buying process. And I think that's something you can factor. If you find the deal of a lifetime, maybe you don't have the credit cleaned up, but the rate's good enough. If you're squeezing a deal, you might wait to get the credit cleaned to get the little lower credit or rate and get in. But you can't get that success without you starting the process.
Right. And I actually did what Shannon just talked about last year. I was helping a client buy a home, and there was a pretty large balance that she owed on a credit card. And so we had a loan approval, but we ended up having the client pay the credit card, did the rapid rescore, and then her FICO improved, and she was able to get a better rate.
Okay. So plan ahead, get your credit cleaned up, keep your utilization rates down, avoid late payments, and talk to a professional like Patricia and or Shannon to get your planning started. How's that sound for a wrap up?
Sounds pretty good. Yes. The longer you wait, the worse it gets. So the sooner you act, the better.
Well, I know we're all busy, so we'll wrap up here real quick today. Shannon, someone wants to get hold of you and get maybe together and talk about those credit issues. What's the best way to get hold of you?
Yep. My Instagram, FUND Fund with Shannon, or my phone number, 661-317-8484.
Patricia, what are you doing this weekend? Any special open houses or any work? It's Memorial Weekend, so I don't know. Are you working this weekend?
It's Memorial Weekend. I'll be working probably on, probably on Sunday for an open house in West Covina, 2800 Paseo Cancun. It's a 2-bedroom, 2-bath condo. Beautiful, beautiful condominium. And I'm here. If you guys have any questions or need any guidance, feel free to reach me, 323-365-9909.
And I'm Bill Gross, at Bill Gross Probate on social media. And we appreciate you guys. New episode drops every week on Friday. Let us know what you think. Give us some comments, feedback. If I can help in any way, or if any of us can. And always make today your best day ever. Thank you so much, everybody.
Thank you.